So you've got $1,000 and you're thinking about putting it in the stock market. But with so many options out there, where should you even begin? Should you go all in one stock or spread your money around? Let's break it down and figure out how to make your $1,000 work for you in 2025. Investing $1,000 in the stock market can feel overwhelming, especially if you're new to the game. But here's the good news. Getting started with that amount opens up a ton of possibilities. Whether you're looking for slow and steady growth or hoping to take a few calculated risks, investing now, especially as we head into 2025, is a decision that could shape your financial future. But before you dive headfirst into the world of stocks, it's important to have a plan. This isn't about throwing money at random investments and hoping for the best. It's about understanding your options and creating a strategy that aligns with your financial goals. Let's explore how to invest $1,000 smartly and make your money work for you. Here's the thing. $1,000 might not seem like a lot when you think of investing, but it's all about how you use it. One of the biggest challenges is deciding where to invest it. The stock market is vast, filled with countless opportunities, and just as many risks. So, how do you know where to put your money? Should you aim for big tech stocks like Apple or Tesla? Maybe a safe bet like an index fund or ETF. Or perhaps you're tempted by the promise of emerging industries. The truth is, there's no one-size-fits-all answer. Every investment choice comes with its own risks and rewards. For some, individual stocks might sound appealing because they offer higher potential gains. For others, more diversified options like ETFs or index funds may offer peace of mind because they spread out risk. Alright, let's break it down. When it comes to investing your $1,000, there are three primary routes you could take. Individual stocks. If you're ready to dive deep into research and have a higher risk tolerance, individual stocks could be an option. This means purchasing shares in specific companies that you believe will grow over time. However, this route requires careful research. You need to understand the company's financials, industry trends, and long-term potential. Stocks are volatile, and the price can fluctuate dramatically, so this isn't the best option if you're looking for a quick return. If you're risk-averse. Exchange-traded funds. An ETF is essentially a basket of securities that you can buy and sell on an exchange, just like a stock. The beauty of ETFs is that they offer diversification. Instead of investing in one company, you're investing in a collection of them. This spreads your risk, and you can find ETFs that focus on specific industries like tech, healthcare, or even renewable energy. It's a good balance between growth potential and risk management. Index funds. Index funds are another form of a diversified investment, typically tracking a specific market index like the S&P 500. These funds give you exposure to a wide range of companies and can be a low-cost, hands-off way to invest. The long-term returns are often more predictable, but keep in mind that they are slower to grow compared to individual stocks. Now that we've covered the basics, it's time to think about your strategy. What are your goals? Are you looking for rapid growth, or are you more interested in a steady, reliable return? Your answer to this question should guide your decision-making process. If you're someone who enjoys doing research and staying on top of financial news, individual stocks might be your best bet. But remember, with high rewards come high risks. If one stock underperforms, it can drag your entire portfolio down. If you're leaning toward a more conservative approach, ETFs or index funds could be the way to go. They offer built-in diversification, meaning your risk is spread across multiple companies instead of relying on just one. And while the gains might be smaller in the short term, you're playing the long game here. Over time, these types of investments tend to grow steadily. Before we move on, if you're finding this information useful so far, make sure to hit that subscribe button for more insights on investing and smart money management. We're always breaking down financial tips like this to help you make the most of your money. One of the key strategies when investing $1,000 or any amount is diversification. You've probably heard the saying, "Don't put all your eggs in one basket." In the world of investing, this couldn't be more accurate. Diversification is all about spreading out your risk. By investing in a mix of assets, you're reducing the likelihood of losing everything if one investment performs poorly. For example, if you invest in tech stocks only and the tech sector experiences a downturn, your entire portfolio could take a hit. But if you've diversified across tech, healthcare, and consumer goods, you're better positioned to weather the storm. With $1,000, you have the flexibility to diversify, whether it's across stocks, ETFs, or index funds. By doing this, you can create a balanced portfolio that protects you from major losses while still allowing room for growth. Now, let's talk specifically about 2025. The stock market is constantly shifting, and in the current economic climate, it's more important than ever to have a strategy. Inflation, interest rates, and global events all play a role in how the market performs. For 2025, consider focusing on sectors that are poised for growth. Tech and renewable energy are two areas that have shown strong potential. Companies innovating in AI, green technology, and healthcare are likely to see continued growth. Look for ETFs or index funds that focus on these industries to take advantage of their upward trajectory without putting all your money into one company. Another key point for 2025 is to remain patient. The market is volatile, and short-term dips are inevitable. By keeping a long-term perspective, you're more likely to see steady returns, even if there are some bumps along the way. To wrap things up, the most important takeaway is that investing isn't about getting rich overnight. It's about building wealth over time. Whether you choose individual stocks, ETFs, or index funds, the key is to stay informed, diversify your investments, and keep your emotions in check. The stock market can be unpredictable, but with a solid plan and the right mindset, your $1,000 can grow into something much larger over the years. Remember, it's not just about the money you put in, it's about how you manage it. We hope you're feeling more confident about how to invest your $1,000 in the stock market. If you've got any questions or tips to share, drop them in the comments below. And if you haven't already, make sure to like this video and subscribe to Sophisticated Saving for more money management tips, investment strategies, and financial hacks.